Hey gang, Chuck Barone, Friday, July 22nd, 2022. Welcome to the show. We're glad you're here. I'm glad it's Friday, gang. I gotta tell you, this has been a crazy long week and a gigantic big finish to it today. We got so much stuff to go over. We really appreciate you being here. Anyway, let's get to this quick market recap. Stocks down pretty bad today, guys. They kind of were just started off kind of flat and just kind of drifted lower the whole day. NASDAQ actually pretty nice down day with almost 2% down. It looks like traders in the stock market are kind of coming to grips with the reality that this recession is real and it's here, and earnings on stocks are going to suffer, so prices have to kind of adjust correspondingly, right? In the bond market today, St. Jerome strikes again another miracle in the bond market. The 10-year yield now sitting at 2.78. It's just incredible to me. Now I know that there's some flight to safety. I know that people are pulling money out of the stock market and not really knowing what to do with it. They're kind of putting it in treasuries. Why they're picking the 10 years is a mystery to me, but I think that you're seeing some flight to safety here. But the idea that that's what's driving this market and driving a 10-year yield down almost 15 basis points in a day, I don't know if that passes the sniff test, man. So we'll see where this bond market goes. We know next Thursday we're going to get a three-quarter point increase. At least that's what they're promising. We'll see what happens. The dollar still standing tall, just under 107 on the dollar index. Even in the face of European Central Bank raising their rate a half point, a big bold move yesterday to 0%. I guess that's not really going to phase the dollar till the euro gets a little more competitive as far as rate goes. The metals market, just a blah day today, guys. The nice thing is gold did break a pretty long losing streak here. I got it written down. 5-week losing streak. So finally a week up for gold today. Up $5 today at $17.65. Silver just a fractionally down, $18.66. Metals were having a pretty fair day, but kind of just like stocks, at the end of the day, just kind of just drifted down. Not a lot of buying interest there. Oil today gets slammed down, 94.60 on West Texas Intermediate. Natural gas, a big rally again today, up just almost 5% to 830 per million British thermal units, or however they're measuring natural gas. That looks like something that's still got a little room to the upside. We'll see where that goes. Bitcoin down small today. It looks to me like they're likely going to test the support just under 22,000 before the next leg up. It looks like Bitcoin's a little bit steady these days, and I think that we might see an up move for Bitcoin coming up. News today, guys, there's just so much of it. I got a whole page of notes here, so bear with me while I kind of run through this stuff for you guys. Having a chat with my broker yesterday. We were sitting shooting the breeze, and she mentioned that for the first time since I've been in this business, we now have 40-year mortgages available. So this whole debt trap thing keeps getting worse and worse for working people. Now they're trying to figure out how they can trap you even further into debt with a 40-year mortgage. Most people don't pay off a 30-year mortgage. Now we're talking about extending it to 40 years. It's just designed to keep you in permanent debt, paying it like a renter, where you never really own the house. The bank does. You just paying. Not a scheme I would be backing. Mortgage rates are creeping back up closer to 6%. And here's the thing I want everybody to be aware of. If you're a renter, during 2008, between 2008 and 12 when the recovery, a lot of landlords were collecting rent from their renters, but not paying their mortgages. So these renters thought everything was kosher till they got stuck with an eviction notice out of thin air, out of boom, crashing down on their head with no notice because the house was foreclosed. So if you're renting from a private landlord, double check if you possibly can find a way to make sure that they're still paying the mortgage so you don't get caught in this trap. I think that this is something we're going to start seeing more and more of. Other big news today, Turkey and the United Nations announced that Russia and the Ukraine have reached a deal so they can export Ukrainian grain through the Black Sea. I think this just demonstrates a little bit more what a giant money this war, it just seems like it's, I don't know, it just seems like a giant money thing, man. How do you got two countries at war, now they're going to just say, well, we'll put a pause on here at these ports so we can ship grain. I don't think they did that in World War II or any other war that I can remember. It's just, I don't know, it's just, that's an interesting little tidbit today that I thought you guys should know about. Another interesting thing today, I was reading that the Republican candidate for governor in the state of New York was on the stump. You know, they got a big election coming up in November. And out of the crowd comes this lunatic, attacks him on stage with a knife. I mean, you can disagree with the other side. Red team, blue team, whatever. Me personally, I'm not a fan of either team. I think they're all full of crap. But I think we need to chill down the tone a little bit here where, you know, now violence at these rallies is becoming more and more common. That's not the way we do politics, at least the way I'm familiar with doing it. So hopefully that we can find a way to kind of knit some stuff back together and stop this insanity, man. I was laughing today. Bloomberg came out saying that the recession looks like, let me read this here, is the price to pay to beat back inflation. So I guess Bloomberg now has come to the conclusion, like all of us, that the recession is real. It's going to cost jobs. It's going to cost stock prices. It's going to cost a lot of things. And hopefully now, you know, this reality is going to set in and we can manage this recession a little bit better. Denying it is not a great way to manage it, guys. Bond yields worldwide, not only were they cratering here in the United States today, but literally all around the world. Huge bond rally everywhere. It's crazy to me, but I guess people feel safer in bonds than they do in the market right now, and that's sensible. But these bonds, I mean, they act like bonds don't have any sensitivity to market rate risk. They do. We already know rates are going up, so investing in bonds just seems crazy to me, but it is what it is. The U.S. Purchasing Managers Index crashes down today to 47.5 on their scale, if I guess from 1 to 100. Came down from 52.3 last month. And the way this index is read, anything under 50 means the business economy is contracting. To drop from 52 to 47 looks like a pretty significant contraction to me. The recession's here, just more and more evidence all the time, 50 times a day, it's in our face. It's here and it's real. Now they're calling, the new one they're calling it now, because this whole thing is just such a joke, guys. The newest cool phrase in the media is a full employment recession, where somehow or another employment isn't going to be affected as businesses make less money. I don't know. I mean, it just, if it wasn't serious, it would be comedy, guys. I mean, it's crazy. So here's an interesting thing today. You know, our friends at Blackstone, who I talked about yesterday with their new real estate fund, they actually posted a loss for the quarter. Wow, they lost $29.4 million, 4 cents per share. Not a big loss, but still a loss, versus $1.31 billion profit, or $1.34 profit a year ago. I guess their Their private equity portfolio, their stocks they own, were the culprit for this, down 6.7%. But all in all, guys, that's not a bad return, considering the S&P right now is down about 16.5% for the year. Blackstone, they are, along with their counterparts at BlackRock and a lot of these other PE guys, causing havoc in the economy. So it's kind of at least a little bit amusing to see a little bit of a pin get poked into them once in a while. I was reading, it said today, a new survey expects 43% of Americans surveyed to add new debt, new accounts, new debt on existing debt over the next 6 months. I'm not sure if that's great news, because, well, actually, if they could hold it to 43%, that would be pretty good news. But remember the rule. When they tell you something like that, you got to kind of double it. So I would think maybe around 85% of people are going to be adding new debt on. Hopefully nobody that's been watching this show, because that's one of the things we've been preaching, if you can possibly avoid it, don't add debt. So that was an interesting fact I thought you guys need to hear about today. This was interesting today in real estate. I was reading that a private equity group just bought an entire neighborhood, 233 houses, for $110 million. So now they're not going to do it just piecemeal, buying up existing properties. They're going to come in and bail these builders out and buy up whole neighborhoods. 233 houses in one pop. It's just, the corporate takeover of real estate is ongoing. It's driving these rents to the moon. I can't wait to see how they try to unwind that stuff. Another interesting little tidbit today, Amazon just spent $2.39 billion more buying into the healthcare business. If any of you guys have ever dealt with our healthcare system in this country, I'm sure you would agree with me when I say the last thing we need is more corporate in healthcare. The big banks denying this recession. Citibank CEO Jane Fraser comes out. This is a quote here. While sentiment has shifted, little of the data I see tells me the U.S. is on the cusp of a recession. Really, Jane? Have you been reading even what the Federal Reserve is reporting? We know GDP now is down in the first. We know the Atlanta Fed, their GDP tracker, is telling us it's down in the second. What data are you looking at? Credit Suisse, here comes their economist. It's now more likely the economy will avoid a recession than undergo one. Really? I don't know how they possibly can win the favor of their customers, their clients, with this kind of nonsense. If you can't see what's right in front of your face, how do you have the credibility to be the CEO of Citibank? I mean, it's just beyond me, guys. Here's a little bit of a tidbit that you guys might find interesting. I did. 20% of Bank of America clients with incomes greater than $250,000 per year spent 15% more than they deposited. So now even the rich are having difficulty making ends meet, because in my mind, if you're making $250,000 a year, you're doing pretty good. 20% of that class is now spending more than they're making. It's bananas, man. This latest one I saw, these banks are desperate for mortgages. They're desperate to try to get people into these HELOCs they're offering. So here's the new slogan, made me laugh today. Don't borrow from a bank, borrow from yourself. Well, you're going to borrow your home equity, but you're going to borrow that equity through a bank. So how are you not borrowing from a bank when you're going to make them a payment every month? Are you going to make the payment to yourself? It gets crazier every day, gang. I can't even stand it. It's just, how can you actually put together any sort of proper plan when this is what you're dealing with every day? Take our advice, guys. Save 10% of your income, hunker down, spend your money prudently, invest your money conservatively, build your war chest up. These are the things that are going to be necessary to do well in this crazy economy recession we're dealing with. And that's pretty much what I got for today, guys. We really appreciate the support as always. Remember to like, share it with your friends, with your subscribers. Comment, ask your questions like you guys do every day. You're awesome in the comment section. If you haven't already subscribed, make sure to click the bell so you get your notifications. And as a side note, we're going to start doing these Q&A videos for release on Saturday. You guys have been asking so many great questions. I want to share some of this stuff. I've actually had a lot of requests and comments to share this stuff. So for the next few weekends, until we run out of questions, we're going to start releasing a video on Saturdays, just me answering questions you guys present me with. That's it for the day and the week, guys. We really appreciate the support. Have a great weekend. Try to relax and not think about this economic stuff if you can help it. Until we see you again on Monday, have a great weekend. Thanks.